A practical Elliott wave, a technical analysis. Practical Elliott wave, a technical analysis. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Good morning, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders for Elliott wave trading. Our website is www.24elliottwaves.com. A practical Elliott wave, a technical analysis. Today we're going to count Elliott wave, analyzing the Russell 2000 stock index. This is a practical Elliott wave, a technical analysis. I will be counting waves on a weekly chart. I will be validating my wave counts, and I will be talking about multi-wave, corrective wave, using the wave principle. It is one thing to learn the Elliott wave theory. All right, a lot of traders know about the Elliott wave, and they can correct anybody when we are talking about the wave principle. But there is a big difference between the theory and the reality of the market. The application of the wave principle. This is about practical trading. When we are talking about practical Elliott wave count, how do we count wave? How do we validate wave? How do we forecast the wave? What do we expect? What do we need to do? What do we need to pay attention to? All right. So the first thing first, we want to pay attention to the market. So we talk about the trading triangle, the market first, the sector before the individual financial instrument. All right. So when we are talking about the market, bear with me, we are talking about the S&P 500. So if you are trading stock, you are analyzing stocks, you are counting wave, you are talking about practical wave count for any stock, you want to refer to the market. The market is the S&P 500. Okay. So because I want to count Elliott waves for Russell 2000, I'm going to go quickly and just look at the S&P 500. All right. Here it is, all right? This is the S&P 500. You can see that the S&P 500 is in a rising channel, is trending up. But that trend has begun in 2009, okay? So I'm going to place a vertical line at the point where we have the market starting a bullish trend. So the market is in a bullish trend, all right? And that trend has started in 2009. We also know that from 2007, unless you are a baby, all right? If you are, an adult person, you know that from 2007 to 2009, we have, a bearish season, which is a corrective phase, all right? The market went down, okay? After the correction, we have a bullish trend, and that bullish trend has started in 2009. So the market is in a bullish trend, and that trend has started in 2009. Okay. Let's go back now and look at the Russell 2000 that we want to analyze using the wave principle. Okay, so we will put also a vertical line there. We know that, there was a bullish trend that has begun in 2009, and the Russell 2000 also began a bullish trend. You can see here, if I put on my chart very fast, the pitchfork tool, all right, the pitchfork tool, see that we have a bullish trend. The pitchfork tool will determine the possible path of the trend. So once we see a low and a higher low, and then a pullback like this, 3 point we need to draw the pitchfork tool, So with these 3 points, we draw the pitchfork tool, and the pitchfork tool will tell us the possible path that the price is likely to take. So with that information, we know that the trend is likely more than 80% of the price action during the trend will remain within the boundaries of the pitchfork tool. All right. Okay. So let's remove the pitchfork tool from our chart, and we're going to start counting wave. All right. So here it is on the weekly chart. Okay. Let's start counting wave. All right. So we have 6 guidelines that we follow where we are counting Elliott wave, because we don't want to get confused. We are looking for certain things to take place, and as I'm starting doing that, okay, you can see that the trend has begun here. Now, if you look carefully, all right, we have what? An inverted head and shoulder chart pattern here. Yeah, this is the head, this is the left hamster shoulder, this is the right hamster shoulder. So following our guidelines, I do not count my first wave from here, like many other Elliott wave traders do. I do not. I count my wave from here. So because the most difficult wave that trader will recognize, once you recognize the first and the second wave, we can forecast the whole trend. And we can also, okay, it become easier to identify the third Elliott wave, okay? So practical Elliott wave trading. So this is my first Elliott wave, okay? So one thing we need to understand, this is what I'm trying to get into the mind of traders. The wave count is dynamic, is step by step. So trader may say, Joe, you said this last time, okay, then the price did that. The price, we are following the price, and the wave count is dynamic, okay? So we start with what we call preliminary wave count, and then we go to wave validation. But if the price, okay, is telling us something, is telling us that the music has changed, we can forget our wave count and restart again, revisiting the chart and see what is taking place. Just being honest. While things are not adding up, okay, as we have seen it before, let's go back again and look at the chart. Some traders may find that difficult to do, all right, because it's the way their mind functions. So this is my first Elliott wave. So at this point in time, I would say this is my first Elliott wave. Now the price pulling back is here. You may say, okay, maybe this is a very bullish second wave. But whenever you see the second wave in straight line like this, be careful. I don't like that. All right. If you see the second wave just like this, it's better to buy above the prior high because of what the price may do. 1, 2, 3. All right. So here, if you see you count your second wave like this in one straight line, it's better to buy above the previous high because the price may do something like this and then may come back and pull it down. Okay, here which it did here. So we have 1, 2, 3 down, which has cancelled my first wave. So my second wave, in this case, has cancelled my first wave. So what we following our guidelines, I would say, no, this cannot be what I'm calling first wave. So you see now, so when we are here now, I say, okay, now this is no more my first wave. All right, so it's not exact sign. So now I cancel this. I say this is no more my first wave because according to the wave principle, the second wave should not cancel the first wave. But you will be amazed. Some trader may say that, George, it did not cancel it because it didn't come all the way to the lower part of the, okay, your primary first wave. But in my view, it has canceled it. Here, it canceled it. So I would say, okay, if the second wave has canceled the first wave, following our guidelines, I must restart counting my wave. So there was a cancellation here, so I'm going to place, okay, a vertical line where the second wave has canceled it. Now I'll start counting my wave again because there is a violation of the wave principle. So I say again, this is my first wave. The first wave can be subdivided into 5 manual waves, but as it starts here, we don't know what the price will do, whether it's going to be a complex first wave or a normal first wave. But now we know that it was a complex first wave, which has been subdivided into 5 manual waves on the weekly chart. A common wave count mistake is to count wave on one time frame, which I like to say counting wave on a single time frame is a big trading mistake. One must use at least 2 times frame. So my wave count here is what we call preliminary wave count, step by step, following the price. Okay. The most important thing, as I was recording a video last time, talking blah 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 for 1 hour. All right, trader think that this is a useless video, but it's not. This was what's going on. Okay, what's going on? So, so here we are. We have 5 waves. So this is my first wave from here. 1, 2, 3, 4, 5. No violation of wave principle here at all. All right. The 4th wave fourth minor wave should not overlap the fifth minor wave. Is clear-cut, okay, progression. But I have a bit of worry here. What is the worry? Because the characteristic of the first wave is to break resistance. But look, it didn't break it. So here, we can put a question mark on this first Elliott wave. So let's put the orange spotlight to highlight, okay, our, okay, anxiety, okay, because this first wave did not break this resistance here. We give it a chance, and we continue to count our wave, okay? Are you with me, my friend? So now, what is the second wave? My second wave, here it is. What did I say? Whenever we count the second wave in straight line like this, it's tricky because you may go 1, okay, 2, okay, and then 3 down. So it's better to buy above this high here if you don't want to play this game of a second wave. All right, prior high. If the bullish momentum will continue, the price must go above the prior high. All right, okay. So this is my second wave right here. No violation of the wave principle because the second wave that I have here did not cancel, okay, all right, my, okay, my first wave, all right, it makes sense? So at this point in time, a lot of traders will say, Joe, you are wrong, and all I will say to traders, this is my wave count, and I did not violate the wave principle. And most importantly, remember what we said before, the bottom line is not to lose, okay? The bottom line is to make money. The bottom line is not to violate the market pattern. All right, okay? So here we are again. So we say, okay, Joe, this is my second wave. Where is my third Elliott wave? All right? Now, one of the tricks that they can know quickly, this is the third Elliott wave. Third Elliott wave, we break above the high of the first wave. So I may start looking above the high of my first wave. So where is my third wave? So probably I may say, okay, at this point, so looking at the chart now, I may say my third wave, probably this one on my chart is above the high of the first wave because it's already printed here. I'm counting the wave now. So, oh yeah, I'll say probably this is the third wave. Okay, very good. But the third Elliott wave can also be subdivided into, okay, 5 minor wave. So this progression here, boom, 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 up, is a minor wave of my third wave. So I'm trying to count wave, and this is my preliminary wave count. So what I will say to traders, when you count, when you're doing your preliminary wave count, do not show it to anybody. Do not let anybody confuse you, all right? Just count it and keep it for yourself, okay? All right? It makes sense? So what I'm going to do like this, okay? So I'm going to extend this one down all the way here. So my third Elliott wave, 1, 2, okay, that's correct. I'm going to color my third Elliott wave into orange, which has been subdivided into 5 gorgeous minor wave. This is to make you laugh a bit because when you are watching video like this, you need to smile, okay? All right. Don't be too serious, okay? That will help you, okay, bust some stress out. Keep smiling, please. Okay. Did I make you smile? That's good. Help your blood pressure. Okay. All right. So first wave from here to here. Second wave down here. All right. And then, okay, the third Elliott wave has been subdivided into 5 minor wave. 1, 2, 3, 4, 5 minor wave. Okay. This is my preliminary wave count. My fourth Elliott wave is, okay, A, B, C, D, E. Here it is. Can you see the A, B, C, D, E? 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3, 4, 5. So the consolidation here. If you like, I can put in a different way. Like this, it's a channel that went down. We call it ABCDE. If you don't know ABCDE, a chart pattern or wave pattern, it's time to subscribe to 24 Elliott wave. Okay, not for 1 month and then unsubscribe. Okay, this will make you laugh a bit. Okay, so this is my 4th Elliott wave. All right, this video may be a little bit long because this is a practical wave count. So in real time, this is what's happened. You cannot do it in 5 minutes. You cannot do it in 2 minutes. And I don't like to edit this type of video. I want trader to see the raw material. All right, so they may criticize or comment on it. All right, this is what we are talking. So this is my 4th Elliott wave, okay, which has been A, B, C, D, E down. Okay. So 1, 2, 3, 4, 5 down. Okay. So my 5th Elliott wave, preliminary wave count, which I shouldn't show to anybody else. This is my 5th wave, which I'm going to color now into pink. All right. So now you can see that my 5th Elliott wave, I'm making it to start from here. Some trader may disagree and say, John, is from, hold on please, is from here. No problem at all. We are in the same direction, but the move that has started from here. I prefer to put it here. Am I violating the wave principle? All right. So we know that, don't get confused, my friend, from here all the way up here. This is the 3rd Elliott wave. Boom, 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 up. It's the 3rd Elliott wave, followed by the 4th Elliott wave. My 5th Elliott wave is starting right here, and it has ended here. Oops, I don't want to move that line. All right. Now you understand why I don't move my lines, because I need them on my chart. Okay. So my 5th Elliott wave is this one here, which I'm going to color now into pink. All right, to please the ladies that can trade better than men. All right. Okay, let's move on. So this is my preliminary wave count for, okay, the Russell 2000, talking about practical Elliott wave, technical analysis. As we started counting the wave, we counted this one as the first wave, but because the second wave has counted the first wave, we restart counting our wave. Now we have a new, freshly built first wave, which has been subdivided into 5 minor waves. It's the blue lines here. Then we have a straight line second wave, followed by a 3rd Elliott wave, which has been subdivided into 5 minor waves, followed by 1, 2, 3, 4, 5, 4th Elliott wave, A, B, C, D, E, okay, Elliott wave triangle, and the 5th Elliott wave right here. All right, so there was a trend that has started here. So you may be wondering, you say, George, the trend has started in 2009, and you are counting your wave from here. But because the our primary first wave has been canceled, and also if you look at the correction went down, all right, the price, okay, if you can draw, okay, pay attention carefully here. There's a reason why, this is why we are talking about the price, the number one, you see this trend here? There's a reason why this move came all the way here. So this is very important. Very often, when traders are counting wave, they ignore everything else. They say, Elliott wave, I don't want to know about trend line, I don't want to know about channel, I don't want to know about market geometry, I don't want to know about pitchfork tool. Do not do that, okay? Do not do that, all right? The first thing first, before Elliott wave, market pattern, okay? Very, very important. Next thing, key, resistance, and trend line. So we can see that we have the inverted head and shoulder, the shoulder pattern here is what some traders call slanted inverted head and shoulder, which means the neckline is not, okay, all right. You may say the neckline is not horizontal, some may say the neckline is here, okay. But this trend line that I've drawn on my chart, okay, see, price breaks above that blue trend line and came back to retest it here, that's all. The professional are aware of this trend line. If you count this first wave, they wanted to retest it here, and this is what has caused the cancellation. Now we begin to count the wave from here. All right? So this is my preliminary wave count. haven't finished here. Now we have a correction. How do I know that we are in a correction? Okay. Again, remember what I said. The first thing first is what? Market pattern. You can make any sort of mistake. You can count the way wrongly. You can call a zigzag something else. One thing that you do not want to do is what? Do not violate the market pattern. Once again, I'll bring, instead of drawing a channel, I want to use my pitchfork tool. All right? All right? Because we can combine the pitchfork tool and the wave principle, yes or no? All right. If you don't know, okay, check our videos at 24 Elliott Wave YouTube channel. Okay, how to combine Elliott Wave and pitchfork tool. So the pitchfork tool is telling us, okay, the path that the price is likely to take during, okay, the trending phase. All right, here it is. I know now that we are in correction because the price is out of, okay, our primary channel is out of the pitchfork tool. So here we are, we have counted 5 waves. Now we have what? A, all right. B, all right. And C. All right. Is it making sense now? So we are in a correction. So at this stage again, I will need to say something that can help traders. The wave count is dynamic. Forgive me to say this 100 times because it's very important. The wave count is dynamic. So there are many things that can happen here. This can be the end of the correction and then a new trend may begin, or talking about different types of correction, the price may form what we call a double retracement. So we see here, we count 1, 2, 3, 4, 5 wave. Correction 1, 2, 3. So they may say end of the correction, but at this stage it's too early to say that. The price may do something that we call a double retracement. Talking about a flat correction, the price may go all the way up to retest the edge of this trend line, may, and then go back up to form a new higher high above the high of the 5th wave. What kind of correction is that? It's the expanded flat correction. The price may go above, okay, the high of the 5th wave. So where is the price likely to go? It can go to 138.2% Fibonacci extension of the 5th wave. So what do I mean? We apply the Fibonacci extension, all right, to the 5th wave. And we will highlight the level of 138.2% Fibonacci extension level. So sometimes may say, George, I love you so much. You just forecast the Russell 2000 and I will go and buy the Russell 2000. If you receive a signal to buy, why not? If you do not receive a signal to buy, then what are you doing? All right? Okay? This video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell any financial instrument. Now, I switch to the yearly chart. I can see my 138.2%. We can calculate that manually, but because I cannot see it, I will go back again to my weekly chart, and I will remove my Fibonacci extension tool. But we know that a double retracement can push, okay, the flat correction above the high of the 5th wave up to the level of okay, 138.2% Fibonacci extension level of the 5th wave. We know that, okay? So that's why I want to highlight that level on my chart, but because I cannot see on the chart, I leave it there for now, okay? The price may go double retracement, 1, 2, 3, 1, 2, 3, but may not go all the way to 138.2% Fibonacci retracement level, but may form instead either equal high right here, or even a lower high, Elliott wave failure. Check Elliott wave failure at 24elliottwave.com. A lower high, okay, may form a lower high, or the price may form equal high, or the price may go all the way to 138.2% Fibonacci retracement level. Trader message, John, we will definitely have, okay, especially new trader message, John, we will definitely have a flat correction the way things stand now. Maybe one step at a time. But as I said to you before, the most important thing is not to lose. And how do we avoid not to lose? We don't want to violate the market pattern. So on a weekly chart, we just draw this straight line, you see here, this point and this point right here. Okay, and we can draw, okay, you see why I have too many lines on my chart. Sometimes you may be wondering, George, are you getting mad? All right, here you see now. So you have a blue declining channel here. You see here, this channel, 1, 2, 3. So remember the market pattern before the wave count. So this is about practical, okay, wave count and practical trading. So the price now on the edge of this declining channel, which I'm going to color now into orange. All right. So the first intention of traders is to sell here. All right, until it breaks above the orange line and find a support and continue to go up. So, practical Elliott wave technical analysis. So far, we have counted 5 waves, followed by a correction that is still underway. We may have a complex correction, all right? We may have a flat correction. But the bottom line, we don't want to violate the market pattern, and we don't want to lose, and we don't want to assume anything. But what will you do if the price is doing exactly what we are expecting? Well, we will take advantage of it. Very simple. All right. So we are talking about a declining channel, a mini declining channel. So traders who understand how to combine Elliott wave and market geometry, here it is. Well, if you measure, okay, don't want to move lines, the width of the pitchfork tool or the rising channel, and because the price came out of that rising channel, you project it in the direction of the price, yes or no? All right, but you can see that I have another blue line here, is because if I remove my pitchfork tool, all right, you can see that something else was in place before. That's why I have these 2 blue lines here. This channel here is the projection of a channel that I drew before on my chart here. So to get that channel, all I do, I just project it again, and you see my original channel. Hold on, please. I will adjust it soon. Don't get mad with me. Don't get mad, traders. Don't get mad, okay? Be tolerant, okay? Here, be patient, be patient. I'm trying to draw things, all right? And I'm going to move it again here so that the line stays parallel, okay? Here it is. Now it's parallel, okay? And then I'm going to project that, okay? One more time. Instead of using a pitchfork tool, I'm using now a channel that I've drawn before, but because I want everything to be as it were before, that's why I'm going the other way around, okay, to get him back to normal, okay, trying to measure the width that is equal all along. Here it is, and one more time, another verification here. Here it is, now we have it, okay? So, will you agree that the price was first in this blue channel at the top here? After we started the first wave, second wave, third wave, fourth wave, and the fifth wave was confined in the blue channel here. Will you agree? Yes. Okay. As the price out of that channel, using market geometry or combining Elliott wave and market geometry, we will measure the width of the original channel in the direction of the price. So we'll set the target here. So you see how it dropped? 1 to the edge of our projection channel, came out of the second channel, 2, okay, boom, down, 1, 2, 3, and then retest the lower part of the channel. This point in time, we are now at which level? At 50% Fibonacci retracement level. Now, this is, I need to mention to traders that what is happening here, These are professional trading because these things are happening all the time in the market. Price will pull back to 50% Fibonacci retracement level. Okay, here it is. During a correction, 1, 2, 3. And they call this zone sweet spot. But what usually takes place, a lot of traders who do not know Elliott wave will assume that, okay, a new trend is in place. For Elliott wave traders, we say that anything is possible because we know that a correction can be a complex correction. We have various types of correction. So we cannot just, a lot of traders who buy at a sweet spot, they buy and forget and say, oh, a new trend is now in place, the market is going to go up. That remains to be seen. Maybe it's only 3 corrections. Maybe it's only 1, 2, 3 end of correction. And the price may go up, 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 up. We may have a new trend. Once again, the wave count is dynamic. So you may refer back to this video a few years ago. If, for instance, Russell 2000 break above the 138.2% and continue a new trend, you may say, Joe, all you were saying was mumbo jumbo. The price start a new trend here. The wave count is dynamic. So we will go back again and say, well, we thought that at this point in time, the price will have formed a flat correction or something else. But it just pulled back 1, 2, 3 and resume a new trend, and that trend is still in place. Or will the price going to do something it did before here, the inverted head and shoulder chart pattern, and then 1, 2, 3 pull back? Will it do exactly the same thing? You remember? Forming a head and shoulder chart pattern here, will it do a head and shoulder chart pattern here? All right, will it do something like this? And then a pullback again to retest, okay, like it did here. You see this trailer here. Will it do exactly, so I want to move lines, exactly the same thing here after the inverted head and shoulder chart pattern, which means you will go as it did 1, 2, 3, and then up, down, and then up again before coming back to retest, okay, this trend line. All right? So if it, as it did here, we see inverted head and shoulder chart pattern, price go up and then pull back to retest this trend line here. Are we going to have the same thing here? 1, 2. Yeah. If that's the case, we'll start counting another new first wave from here. But we will see. So far, we have 5 waves and a correction is underway. That's all we can say at this point in time. If we want to day trade or swing trade, we must not violate the market pattern. So this is the end of my preliminary wave count. All right, I'm going to go now to the next stage because it's a big trading mistake to count wave on one time frame. All right, so we use normally the ratio 1 to 22 for the validation of our wave count, yes or no. But for this wave validation, all right, my friend, I'm going to go, as I explained to you, we can use the yearly chart and the monthly chart for the wave validation, very important. Now, because the most important is to use a higher time frame, but the exact time frame is the 22 weeks, the correct time frame for our wave validation. Allow me now for my wave validation. I'm going to remove some lines, so bear with me. When I'm switching my time frame, all these lines, I don't need them for my wave validation because I don't want, I'm going to change time frame. I don't want to get confused. All right. So this is, okay, what we say, okay, we are saying so far. We have 5 waves. The first wave has been subdivided into 5 mono waves. The third wave has been subdivided into 5 mono waves. And, okay, the fourth wave also has been subdivided into 5 mono waves. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. All right? A, B, C, D, E. All right? It's the fourth wave. All right? I'm going to call my fourth wave into green. I'll use turquoise for my fourth wave. This is the line here. That's my fourth wave. All right. And this is the beginning of my first wave, end of my first wave, second wave, third wave, fourth wave, and fifth wave. Now a correction is underway on this weekly chart. We also know that the market has started a trend in 2009, and the Russell 2000 is following the market. Okay. All right. So for my wave validation, I'm going to go to the quarterly chart. We can combine quarterly chart and weekly chart. Okay. Because we don't have 22 weeks. All right. So I'll use the quarterly chart. This is the quarterly chart. Let's clear off my okay, we are the quarterly chart now. Okay, let's remove my Fibonacci retracement tool for now. I'll come back to that in a minute. So on a quarterly chart, what do we see? What do we see on the quarterly chart? So it's like we want to convert again on the quarterly chart. So on the quarterly chart, we can see that the price went up like this and came back to the beginning again, all right? And then it went back to the starting point. Are you with me? From here, it went up all the way up here on the quarterly chart, and then it came back down to the starting point, and then it went back again to the starting point. Agreed? Yes. All right, everybody agrees, okay? So start here, went there, return to the starting point. Here again, it went up here. So at this point in time, a lot of traders that are looking at the quarterly charts, at this point in time, when I start counting my wave, it's normal, all right? Everything is adding clearly. Can you see it? I've seen it already. We have what? A cup and handle chart pattern on the quarterly chart. So bullish progression, all right? Followed by a cup and a handle. This is the handle here. If you want to learn how to master the cup and handle chart pattern, okay, go to George Trio YouTube channel. There is a video that we call, is this the most powerful bullish continuation chart pattern by George Trio? All right, check that video. And also, I will be posting a new web page at stochasticmoney.com about cup and handle chart pattern. All right. So if you are watching this video in the near future, check our website for the cup and handle web page. All right. So we have a cup and handle chart pattern here. In normal condition, according to the theory of the cup and handle pattern, all right, the theory and the reality of the market, the bottom of the cup should not retrace more than 61.8% of the prior trend. So what is the prior trend? So normally the correct cup and handle will be formed during a bullish trend. So price going up, and then we have a cup, all right, and a handle. This is the right place. This is the high probability cup and handle pattern. In the video that I mentioned earlier, I have shown traders exceptions where the cup and handle is at the wrong place, so to speak. So here we can say the theory of the cup and handle stated that, okay, the bottom of the cup should not retrace below, okay, the 61.8% Fibonacci retracement level of the prior trend. This is the prior trend from here up to this point. This is the prior trend. So the bottom of the cup should not dip below the 61.8% Fibonacci retracement level of the prior trend. Now, if you look carefully on this chart, this cup and handle, which I already mentioned in that video, all right, this is an exception. You see that it went all the way to the beginning of the prior trend. But the bullish momentum did not stall. All right, so this is a cup. You see the cup? Nice one. Okay, you see the cup here? So professional traders, okay, will measure, okay, the depth of the cup and we project it above the neckline to set their greedy target. Look how the price changed direction. Look, So this is the neckline of the curve, and the projection brings us exactly at 1294. So as the price form, this is the cap here, and the handle is here. See this move down? This is what we call a handle. Check that video. Is this the most powerful bullish chart pattern by George Trio? On YouTube, you will see that video. All right. When I talk about things that traders never talked about before relating to the cap and handle chart pattern. All right. And also, I will be posting a webpage at stochasticmarket.com about the cap and handle chart pattern, a powerful bullish continuation chart pattern that I recommend to all TST traders. Okay. So we have a cap and handle chart pattern that has ended right here. So as soon as the handle is broken, we start counting our first wave. This is a good wave count. So cap and handle was in place, then we start counting our wave. First waves, first minor wave, second minor wave, third minor wave, fourth minor wave, fifth minor wave of the first wave. You see price went up from here all the way here. Are you with me? This is my first wave. We remember we put a question mark on this first wave because it didn't break the resistance on the left hand side. And then we have the second wave, which is the red line on the weekly chart. And then we start counting, okay, our third wave. We say the third wave from here all the way up here has been subdivided into 5 minor waves. 1, 2, 3, 4. Now be careful. If you are looking on the quarterly chart, you may not see this as a pullback here. But if you see on the weekly chart, that's what we say. We zoom into it on a lower time frame. We zoom out on a bigger time frame. So on the quarterly chart, you may not see that there is a pullback here, but there is a pullback here. Yeah. So you see that price went up on the quarterly chart, pulled back like this, and then went up all the way here. All right. Okay. And then you pulled back here, and then it went up here. It's adding yes or no? And also, if we combine the waiver principle and the cap and handle chart pattern, our expectation is that the normal chartists are expecting the bullish trend to end at 1294. Here we are. We agree with them because we also counted 5 waves that has ended exactly at the same point. Now we see that the price is coming down. Okay, it came down. Here, it's going down. So on a quarterly chart, you can see that my first channel, blue channel, the price was within that channel. Now it pierced that channel, retest the second projection, and went down to retest the third one. My wave count at this point in time is a very important sentence. At this point in time is looking good. My preliminary wave count at this point in time is looking good. But the wave count, is dynamic, and we are going one step at a time, following the price. If we are day trading, swing trading, position trading, one must always use, the market pattern, support and resistance and trend line, with the top-down trading method. All right? It makes sense? All right? So this is what I'm saying to traders. Do not be the purest area wave trader. Traders are using all sorts of tools. I talk about the predictive fractal pattern. We talk about chart pattern. Now this is it. We have an inverted head and shoulder chart pattern on the weekly chart. Here we have a cap and handle chart pattern. How do we set the target? We use a pitchfork tool, to determine the possible path of the trend. All right, this is about a practical Elliott wave, a technical analysis. All right, it makes sense. It makes sense. All right, so draw the trend lines and draw the normal support and resistance level. If you are day trading before you switch your entry time frame. Price changing direction here. Now it's here. Market geometry, projection of a channel. So we are talking about this channel here, the blue channel. You remember the declining blue channel. You see how the price came out of the rising blue channel. Now we have again another channel here, which we can project to set a possible target for our Russell 2000. Though we are area wave traders, We are multi-talented area wave traders using all the tools that we have, okay, available for us. So here again, game on. Okay, we have this blue channel as we did for the rising channel. You see how it dropped. So now we can do exactly the same thing, step by step. We don't want to get too emotional. We don't want to assume anything. We're just waiting patiently. All right? No rush. You are not going to miss anything. No rush at all. All right? No rush at all. Don't throw money at anything. If you are losing, come out. All right? Come out, come back another day. All right? No rush at all. Patiently build your skills. Okay? So here it is. First projection of the channel. Here it is. So we have a new channel ready as the price is popping its head into that new channel. We don't want to forget the media line of that channel, okay? All right? To avoid that I have too many lines, I'll just leave it, okay? So this is, you see here? Now, so this is the projection of this blue channel. If we start going in, we know where are the hidden support and resistance level. All right. To avoid that the video is too long, we have been talking for 46 minutes. I will stop here. All right. So talking about practical wave technical analysis, you can see that it can take a bit of time for a technical trader to analyze a chart. All right. We are analyzing, okay, Russell 2000, okay, which is also a stock index. It will be a big trading mistakes. All right, if we do not pay attention to the S&P 500 itself, which represent the market. We know that the S&P 500 has started a trend in 2009, and that trend is in place. All right, the Russell 2000 also started a trend in 2009. We start counting the wave. We start with what we call a preliminary wave count. All right, as we are counting wave, we are paying attention to the wave principle. Second wave should not cancel the first wave. All right. The fourth wave should not overlap, okay? The first wave, very often, the third wave is usually the longest multi-wave in comparison to the first and the third wave. Our wave count, so the mistake that you can make is to violate the wave principle by counting your wave. We know that a multi-wave very often will be in a rising channel. A corrective wave very often will be a consolidation or a triangle. We do not have two trends, okay, next to each other. What do I mean? We don't have we don't very often see what we call a V pattern, one trend coming down, another trend going up straight away. We have a bullish trend, then a correction, all right? We have a bearish trend, then a correction before a new trend, all right? We don't usually see a bearish trend, then a bullish trend straight away. So with those information, we can improve our wave count. So on a weekly chart, that's what we see first, okay? As the price went down, it formed, okay, an inverted hand. They show that chart pattern. By applying our wave count guidelines, we are able to identify the first wave, which is the most difficult wave that one should identify. Once one identifies the first wave and the second wave, we can even forecast the whole wave, okay, Elliott wave cycle, okay? Are you getting the message now? So if we go into wave forecast now, we can now look at the internal wave of the first wave, now which normally should help us to forecast, okay, the whole multi-wave from here all the way up here. I don't want to go into that now. Please do not send me email to ask me to do it because this is a time consuming. I will not do it. Don't ask. All right. So we may do wave forecast by paying attention to the internal waves of the first wave, and we may also pay attention to the second wave, which looks like a straight line on the weekly chart. So if you want to zoom into the second wave here, which time frame should we go? We go to another lower time frame. So the red line, pay attention to the red line, is the second wave. We can go now to the daily chart to see whether we can see the internal waves of that second wave. Still waiting for my data to load. Will it come back today? Or I will, okay, what I will do, let's quickly pause the video as I'm, Okay, trader, there is a bit of technical problem here, but what I will say, we'll wrap it up now, okay? I will wrap it up now, okay? So I hope you have learned something from this video, all right? And we put into use, okay, to make excellent, trading decision. We are the TSTW24 traders talking about practical Elliott wave technical analysis. If you have any question, please put in the comment section, and in due course, okay, I will record another video to answer your specific question. If you have any suggestion, put in the comment section, all right, and I will get back to you, okay? Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about practical Elliott wave technical analysis. In this case, we were analyzing, okay, the Russell 2000, okay, stock index.